Well, LVMH has been performing quite well, so better than expectations with some decent top-line growth. But they are underrepresented in branded jewellery, and branded jewellery is the fastest growing area, growing about sort of 5% as a market. So from that perspective, this would fill that gap. They're also underrepresented in the US, so again, that would fill a gap. And when you're looking at the valuation of Tiffany relative to other branded goods, it is relatively affordable luxury. It's on, even at this, a premium, a 22% premium, it's on about a 14.5 times EV/EBITDA, which is, compared to the overall sector, is a couple of points higher on EV/EBITDA. So it looks sane, rational, strategically sensible, and not that expensive. Now, they're not going to get it at this price probably, but they could afford to pay up a little bit more, and it could still be accretive.
So you think that could be a little bit of a, not so much a bidding war, but that there will be pushback from Tiffany shareholders requesting more cash on the table?
Yes.
Right. I just want to get to some of the other reactions out there, because if you look at what's been happening in the space, there's been movement in other luxury names, but also in affordable luxury names. Is that the right read across? Just because you get one mega deal, that suddenly we should be raking over the rest of the names in the sector?
Well, there's always a read across when you get a situation like this, and looking and potentially revaluing other assets in this space. But I think Tiffany is a little bit of a one-off because of its brand.
What's interesting is the point you make about the geographical spread here, and I suppose that's what makes this deal such an interesting deal. And I was just doing a little bit of work here on the Tiffany numbers from 2018, and when you look at the geographic breakdown, $504 million for Europe, but in the States we're talking $2 billion, and in Asia 1.2 billion. So the opportunity perhaps to sell more strongly the little blue box idea into the European markets looks quite attractive.
Exactly that.
And in terms of the Asian opportunity, perhaps that's not the driver here, because they already seem to be relatively well represented in the Asia Pacific markets, especially Greater China. Do you suspect that's part of the reason why we've got a more positive reaction in the markets this hour? Because if you look at Asia and the China story, that actually feels like it's going a little bit soft.
In the short term, I think in Hong Kong for sure it's softer, but there's still medium term plenty of penetration opportunity there. So I think a tie-up like this would make in a good geographical sense, because Tiffany clearly has got more opportunity outside the US, and that's where LVMH has shown some very good success.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.